Okay, well, that was a look at your cannabis headlines that we're breaking down for you.
All right, guys, cash-strapped cannabis companies still struggling to score capital, but one new company is making things just a little easier, and they even closed a $200 million IPO of their own. Joining us now from LA to tell us more is Richard Acosta, the CEO of Subversive Real Estate Investment Trust. Richard, great to have you here. Before we get to your IPO, let's look back just a little bit. What is a real estate investment trust, and what role does it actually play in the cannabis industry?
Real Estate Investment Trust stands for REIT stands for Real Estate Investment Trust, rather. What I want to explain to you guys is what we formed here, which is a SPAC, a special purpose mission company. And our mission and our goal here is to partner with leading cannabis companies to help them generate growth capital focused on real estate expansion and new site acquisition.
Okay, so when you mentioned REIT, I guess on Wall Street we think most about like apartment complexes, malls. Explain the property that you're dealing with that classifies as a REIT that could be used for cannabis expansion.
Sure. So think about the supply chain, everything from cultivation to manufacturing to ultimate distribution and retail points. We're covering all of that.
What made you want to jump into this space, Richard?
Well, we're California natives. The industry has been a big part of our culture here in Southern California specifically for generations. And as business people, as traditional private equity real estate investors, we saw the opportunity form a number of years ago. And, we sprung into action about 2 years ago with the formation of a private REIT. And now we're entering the public arena here with our public vehicle.
Yeah, you guys recently got $200 million in your IPO. No small feat, obviously, to get that amount of money, because that's pretty impressive. But one thing that's really interesting is the fact that we've seen investment in a lot of cannabis companies start to cool off just a little bit. So what is the appeal for somebody like you guys, or what you guys are doing, as opposed to what we see in traditional cannabis companies right now?
Well, it's no secret, and you've done a great job covering the recalibration in the marketplace. Right? Investors are looking for cash flow. They're looking for traditional business fundamentals. And, we provide exposure to the cannabis industry through the real estate assets and through the underlying infrastructure of the industry. So, we saw the opportunity. We saw the market shift last summer, and we calibrated our strategy accordingly.
So explain the prices right now in the market in the California area, Richard. If someone has a cannabis business and they need an area, right, and they're going to come to you to buy this property, what prices are we looking at on average?
Well, you have to remember, before you talk about prices, you have to talk about the capital markets and, really the lack of capital markets in real estate specifically. It is challenging to find landlords. It is nearly impossible to find true commercial mortgage debt. So that elevates the price of rental yields, if you want to think of it that way. Rental yields are elevated given that these are all unlevered investments for the actual underlying real estate owner. So you are paying a premium to traditional rental rates, and oftentimes, given the specialty use of the real estate assets and the investment that's required, you are also paying a premium to traditional, call it retail square footage or industrial square footage.
So Richard, what's the long-term strategy here if and when more states start to legalize the product, and let's just say in the next few years, federally it's legal here in the U.S.?
Yeah, I think for us, we view this as really creating, the, call it 13th sub-asset class. For commercial real estate. This is a unique use. These are specialized assets. So our view is continue to scale with our current tenants and partners that we're working with today across the country as they expand and really introduce this industry, this sub-industry within real estate to the broader investment universe, and expect full adoption within the investment universe of institutions in the near future.
What's the expansion plan for you, Richard?
Sorry, can you say that again?
Talk more about, you're listed on the Canadian Stock Exchange, right? So talk more big picture. What's next? What's the timeline here?
Yeah, so we are traded today on the NEO in Canada. Our objective is to continue scaling our business, and as the federal laws change in due course, we'll look at a possible uplisting or cross-listing But for today, our focus is to continue scaling on our home exchange, the NEO.
Obviously, commercial real estate booming in cannabis-friendly areas. This is basically a reverse of a trend that we saw back in 2018. What's causing a lot of this to turn around, Richard?
Sorry, can you repeat part of that last part?
Commercial real estate appears to be booming in cannabis-friendly areas, which is a reversal of a trend we saw in 2018. What is the cause of that?
It's simply some supply and demand, and it really is hyper local, right? As new municipalities begin to rezone and open up ordinances, you get a flood of demand for very limited space. Of course, you can only look at cannabis business within a certain zone. You have to observe, certainly have to observe radius restrictions within those zones. So the space is finite within a certain municipality per se. So
All
that
right.
does create a bit of a disconnect when it comes to supply and demand and supports prices.
Richard Acosta is the CEO of Subversive Real Estate Investment Trust. Thank you for joining us.
Thank you.